Pi Network just dropped 3 new products on Pi2Day 2026, and the community is divided right down the middle. Meanwhile, Binance just crossed $100 million in tokenized US stocks in under 2 weeks. 2 completely different stories, same underlying question: is crypto delivering real value or just announcements? Before we go anywhere, do me a quick favor right now. Hit that like button, subscribe if you are not already on this channel, and share this video. You keeping this content alive is what keeps this channel going. And I genuinely appreciate every single one of you for being here. Now let us get into it. Pi Network celebrated Pi2Day 2026, and according to Pi core team on X, the 3 key releases this year extend Pi's services to businesses and developers outside the Pi ecosystem, while also inviting them to join Pi Network and take advantage of Pi's resources and unique benefits. Those 3 releases are SoloHost, Pi Sign-In and PiVerify. At face value, that sounds like progress. But the community's reaction is not exactly a standing ovation, and honestly, I understand why. Let us start with what these products actually are, because context matters here. According to William on X, SoloHost is an experimental feature, now integrated into the updated Pi desktop version 0.6.0. Users can now discover and run applications locally or through self-hosting, which means without needing the internet or an external server. Think of it like downloading an app and running it directly on your own device. No centralized server, no expensive data center. Computation is distributed across human-operated nodes, which currently exceed 420,000 nodes in total. SoloHost also introduces an AI agent called Hermes, which is open source and runs directly on the device. Hermes can also be used to build applications and AI agents. According to William, this is genuinely groundbreaking and highly innovative, with very few real equivalents in the world, especially when combined with the rest of the network's existing features. And honestly, I agree with that take. A decentralized compute layer, running AI locally, distributing workload across 420,000 nodes, keeping data on the user's device during processing is not a small thing. That is actually impressive infrastructure work. The question is whether the people who need to care about it, developers and businesses outside Pi's ecosystem, are going to notice or act on it. Pi Sign-In is Pi Network's external identity login system. It allows users to authenticate with third-party services using their Pi credentials, similar to how Sign-In with Google works across the internet. And PiVerify is KYC as a service for third parties, meaning external platforms can use Pi's existing KYC infrastructure to verify users. That is a legitimate business offering, and if developers adopt it, it creates real utility and real demand for Pi. So why is the community not celebrating? According to Amaron Chain on X, after 7 years, the fundamental questions still do not have answers. What is the real roadmap for 2026 through 2027? When do testnet products move to full release? Where is the decentralized governance? Why are KYC and migration still stuck for millions of pioneers? The response to all of these questions on Pi2Day was 3 new products, which, according to Amaron Chain, are additions, not answers. I want to sit with that for a second, because it is a fair point. You can expand outward all you want, but if the core community still cannot get migrated, still cannot complete KYC, and still has no clear timeline for anything, new products feel like deflection. And I think that is the frustration that is boiling over right now. Here is my honest take. The products Pi released on Pi2Day 2026 show that the technical team is still building. SoloHost in particular is serious work. But building new things and communicating clearly about existing problems are not mutually exclusive. Pi core team can do both. The community is not asking for perfection. According to Amaron Chain, they are asking for a real, honest, updated roadmap, not a blog post every 6 months. Transparency and product development are not enemies. They are partners. And right now, Pi core team is only giving us one of those 2 things. Let me ask you something directly. If you are a Pi pioneer, what is the one area where you want Pi core team to be more transparent? Drop your answer in the comments below. I genuinely want to read what this community thinks. Now let us talk about the price, because this is the other conversation happening simultaneously. According to JB, Pi is currently trading around 12 cents and getting closer to 9 cents. 7 years of mining, building, and major ecosystem upgrades, and the price is sitting there. JB's analysis points to 2 significant issues. First, many pioneers are simply not supporting the ecosystem. People are waiting for Pi to become expensive, without buying more Pi, using Pi, or supporting Pi businesses. Second, false GCV information has discouraged many investors from buying Pi on exchanges. The belief that exchange prices are artificial or fake has damaged real demand from people who might otherwise have bought. This is a structural problem that no product launch fixes. You can ship SoloHost, Pi Sign-In, and PiVerify on the same day, and if the community does not adopt, spend, and build with Pi, those products have no fuel. Utility drives demand, demand drives price. That cycle requires the community to actually participate, not just hold and hope. The GCV narrative in particular is one of the most damaging things that happened to Pi's price momentum. The idea that Pi is somehow worth more than what exchanges are pricing it has kept real buyers on the sidelines. That is not a technical problem. That is a perception problem, and it has real financial consequences. My opinion, Pi's fundamentals are improving. The infrastructure is real. But if the community stays fractured between GCV, believers, and ecosystem participants, the price will continue to struggle regardless of what gets released on Pi2Day. Pi needs its own community to buy in, literally. Now let us shift completely, because there is a story unfolding on the Binance side that deserves serious attention. Binance launched a product called bStocks on June 11th, and according to Binance research data, it has already crossed $100 million in assets under management just 2 weeks after launch. That is an 18-fold increase from 5.6 million on the first day. The product allows users to trade tokenized 11-backed US securities around the clock, convert them instantly and for free, and withdraw holdings to a self-custody crypto wallet. Let me give you the numbers that actually matter here. Emerging markets accounted for 58% of trading volume in the first 15 days. Not the US, not Europe, emerging markets. Binance research attributes this to friction that exists in those markets: foreign exchange costs, brokerage account minimums, and trading hours that do not align with local time zones. At 247, no foreign account product bypasses all of that friction instantly. That is not a coincidence. That is a real problem being solved for a real audience. Nearly half of all trading activity, 47%, occurred outside conventional market hours. Tesla's tokenized stock recorded 99.6% fractional trades, with those fractional positions still making up 88.5% of Tesla's total traded value. That tells you something important. This is not retail activity with negligible capital. Real money is moving through fractional positions. Turnover on bStocks ran 4 to 21 times higher than their underlying stocks. According to Binance research, this gap is widest among mega-cap names, which suggests bStocks is reaching a pool of crypto-native demand that traditional markets were simply not serving. There is one data point I find particularly significant. The tokenized SpaceX product traded continuously over a weekend and independently priced in a 6.5% gap that then converged to within 0.09% of the regulated market's Monday opening price. That is not just a trading product. That is a price discovery mechanism. Tokenized equities may actually function as leading price signals, not passive trackers of what traditional markets do. If that is true, the implications for how markets work globally are enormous. Binance has already expanded the ticker list from 5 to 10 since launch. It now covers names including Micron, SanDisk, Circle, NVIDIA, Tesla, SpaceX, AMD, Intel Strategy, and an iShares South Korea ETF. By holdings, tokenized SpaceX shares account for roughly 53% of assets, and semiconductor names account for a further 37%, meaning close to 90% of total assets held on the platform sit in frontier technology themes. Here is my analysis on this. Binance did not build bStocks for crypto people. They built it for people who have been locked out of US markets by geography, cost, and time zones. And the market validated that theory within 2 weeks. 100 million in AUM is not a soft launch result. That is product market fit. The broader question this raises is one that the entire crypto industry needs to sit with. If tokenized stocks can do this in 2 weeks, what does that say about tokenized real estate? Tokenized commodities and tokenized debt? The infrastructure for real-world asset tokenization is now being stress-tested at scale in public with real capital. We are watching the early innings of something that could fundamentally change how global capital markets operate. And I want you to think about something. Pi Network is building local compute and AI distribution. Binance is building tokenized equity markets that run 247 for users in emerging markets. Both of these are infrastructure plays. Both are targeting underserved users. in ways that traditional systems cannot replicate. The common thread is that the people who actually need these tools the most are the ones in markets that existing systems have ignored. So where does that leave us today? Pi Network delivered real technical work on Pi2Day 2026. SoloHost is legitimately innovative. Pi Sign-In and PiVerify are legitimate product offerings for external developers. But the community's frustration about transparency, KYC backlogs, and the absence of a clear roadmap is equally legitimate. Both things are true at the same time. Binance bStocks crossed $100 million in 2 weeks by solving a real friction for a real audience. And that is the benchmark Pi's new products will eventually be measured against adoption. And use, not just announcement. Keep sharing this video. Every share puts this analysis in front of people who are trying to make informed decisions. And that is exactly what this channel is here for. Now, before I let you go, if you made it this far, you already know you are part of the core Crypto Educate community, and I appreciate you more than I can put into words. Genuinely. Hit that like button if this breakdown gave you something valuable. Subscribe so you never miss an upload, and go check out the other videos on this channel, because there is a lot of content sitting there that directly connects to everything we just covered today. The deeper you go, the more the dots start connecting. Stay sharp, stay informed, and I will see you in the next one. This video does not constitute financial advice or a recommendation and should not be treated as such. We strongly advise seeking independent financial guidance from a qualified and regulated professional before engaging in any investment or financial activities.